Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all. Slightly late, about half an hour late than what I envisaged because of some technical issues with the internet. But now everything is resolved. I hope you are hearing me clearly. And basically, we are going to talk about the markets today. Normally, I avoid talking about the markets, but today I'm going to talk about markets and where it could be headed going 6 months down the line, and how are the markets behaving, why they are behaving the way they are, and etc. So we'll talk about all those things. Plus, then I'll answer your queries. So no stock analysis today, or any stocks that I'll bring to you. I did bring to you the Republic Day special that went really well, and most of you liked it. So thanks a lot for that. If you really want those kind of videos, do support me on Patreon and YouTube, and I'll keep bringing that to you, because that is the only source of income for me at the moment, apart from the trading that I'm doing. All right. So Khalid, walaikum assalam. Rakesh, hi. A very good morning to you. It's about to be good afternoon here. Vishal, I'll do talk about stocks later on, Vishal. All right. Morning there, Satadal. Thanks for all the support. Uh, Thanks a lot, Shashi, for all the encouragement and all. So let a little bit more people join in, and then we'll discuss. See, markets is in a state of, you can say, right now, calamatic fall, as you would call it here in India. Not quite in US, because US markets have stabilized. European markets are fine, but India, why they are jittery, I'll talk about the reasons in a bit. But if you remember October, at that point of time, market was in complete euphoria, and even I was of the opinion that market could head towards 20,000. That's what euphoria could do to you. At the moment, I feel there is a lot of panic. So it's complete opposite of what was happening during October. And I believe that going forward, we need to understand as to how things could pan out 6 to 8 months down the line, rather than getting panicked at the moment. So I can openly say here that I am down around 8 or 9% on my portfolio overall, and that is from break even. So from break even, I am down 9%. But there, if you have bought very good quality top companies, then there is no need to panic about it. What you need to do is analyze your companies, analyze your portfolio, and if you think that any of your stock is not quite good enough for the next 6 months, then take that out. Otherwise, hold on to your positions, and hopefully, once things normalize, once the markets have, you can say, priced in whatever is going to happen with rate hikes, etc., the market will start moving up. We have seen what happened during the pandemic. That when the pandemic was at its peak, market was making new highs. So markets always go up on a wall of worry, and that is what is going to happen here. What has happened is, when the pandemic uh, virtually ended here in India, or was at a low, the stock market started to fall. It is a complete opposite of what happens with respect to any kind of worry that the market has. So right now the market is worrying about the rate hikes in US, plus a prospect of rate hikes here in India, which has not happened for many quarters, so may start happening from June. So the thing is, you need to understand again, and that's why fundamentals play a huge part even while you're trading or positionally trading into the market. And if you're not keeping stop losses, those who keep stop losses have a, say, a 20% target, 5% stop loss, and it gets hit, you get out. That's fine for those. But for people like me, who fundamentally analyze companies, look for 25-30% up move, or is looking for a 25-30% up move over a 6 8 month period, uh, it's very hard to sell the stock. Suppose I'm just giving you an example, and there is no recommendation here. Another point I want to make here is whatever stocks I discuss here is just for educational purposes, and there's nothing like a recommendation on my behalf. So, for instance, a DMart at 4,000, 4,100. Why would somebody sell a DMart at 4,000 even if he would have bought at 5,000 or 5,500? And suppose if you have not bought DMart, then what will you do? Will you buy at 4,000 or will you sell at 4,000? Most of you might buy at 4,000. I don't think even 10% of the people, if I ask those people, they would look to probably sell at 4,000. So that is what you need to ask yourself when you're looking at a particular stock. Yes, they could go down another 10%, another 15%, but you need to look at if your company is good enough to come through when things turn around, when markets go up, whether these stocks will go up or not. And if the answer is yes, then there is no need to sell those. Yes, if you are trading and if you're worried about your losses and you're having sleepless nights, etc., you need to get out with a particular stop loss. But if you can handle the volatility, if you can ride through this phase of probably 1 month, 2 month, 3 months, then probably subsequent 3 4 months you're going to end up either being break even or make some amount of money rather than book losses. That's the first point. Second point here I want to make is you need to analyze where the earnings are going to be and how things are going to pan out. So that is where I wanted to talk to you in detail. So again, I want to make the point, and most of the analysts on the channels do not make that point. Some do, but very few do like that. But I can say that for FY23, we are expecting an EPS of 830 to 850 rupees for the index. So let's say the EPS ends up being 840 rupees, and that's just 15% upside from the current EPS of 730 rupees, which we are at. At 840 rupees at 20 times, we are looking at something like 16,800, which is around the market is currently. So we are at 20 times 1 year forward earnings, which is not cheap. I'm not saying it is extremely cheap. Extremely cheap is 14, 15 times. But 20 times is not expensive either. It's not 28, it's not 30 times. So just for comparison's sake, in 2008, during January, say January 4th, I think, or January 8th, we made the top in 2008. And then we had that Lehman Brother crisis and all that fall that we saw from January to October, and the market fell 60%. At that point of time, market was trading at 28 times earnings, current earnings. So even if I take 730 rupees at around 80, at around 17,000, we are not trading at 28 times. We are currently trading at something like if you calculate something like 23 times, 22, 23 times, which is not cheap again, which is on the expensive side. But then you need to analyze as to how far the market can go down if you look at the fundamentals. So from here on in, I see at most a 1,500 point nifty fall, or we are at 16,900. So at most a 1,200 point nifty fall, around 15,700, 800. We will be trading at 19 times FY23 earnings, which is just 1 year forward. 19 times 1 year forward earnings is very reasonable, and people will jump into buy. So at most we are looking at a 5 to 6% nifty decline from here, probably an 8 to 10% mid cap fall. So we could be headed. So right now we are at 29,000 on the mid cap index. We could be somewhere around 27, 26 and a half thousand on the mid cap index. That's just about it. So if you have very decent portfolio of good quality stocks, say a DMart, etc., or something of those sorts, you might go down another 7% on your portfolio. So if you are down, say 10%, or if you are down 8% like me, you might go down another 7% to 15%. So down 15% on the portfolio. When your mid cap index, because most of the stocks that I hold is normally mid or small cap. So when your mid cap index at 27,000 or 26,500 will be down somewhere in the region of around 6,500. 6,500 from the top is around 20%. So if your mid cap index is down around 20% from the top, you are down 10%, you are outperforming the market. That is what you need to understand. Don't look at one stock. If you have even an 8 stock portfolio, 10 stock portfolio, look at the whole portfolio performance, because nobody can outperform the market on a stock to stock basis, on a company to company basis. You have to look at least your portfolio performance. And if you are outperforming the market, when I say outperforming, is that if the mid cap index has fallen, say at the moment it has fallen 13% at the lows of say 28,500. So if the mid cap index has fallen 13% from the top, and if you are down 7, 8, 9%, you are doing fine. It's not you are doing badly, but if you are down 20%, 25%, then you really have to look at which stocks you have bought into. And again, no stock is good or bad. I say that, and I've said that about 3 months back, when I changed my stance over investment, and I looked at positional trading. No stock is good or bad until and unless it shows you like that. So uh, and fundamentals do tell you that the stock is good or bad. So I give you another example. Again, this is just an example, not a recommendation, but India Mart Intimesh was at 10,200. Everybody was gunning to buy it. At 6,000, 7,000, 8,000, everybody was looking to buy it. Now at 4,500, it may have recovered. I've not looked at the exact price today, but it did go down below 5,000. So four and a half, 4,600, 700. It has gone down 55%. The price is telling you something, that the sector per se is now out of favor, because the whole game of it doing well and the earning cycle and everything for the last 2 years is now over virtually, because things will only get normalized, and companies which are more related to opening up of the economy, which I said in the last Sunday's video as well, that companies which were good in 2018-19 will come back into fashion, and that is what is going to happen. Although right now everything is getting slammed into, but stocks in real estate, stocks in infrastructure, stocks in, you can say, consumer domain, stocks, anything related to opening up of the economy, everything will do well apart from some. So I'm not bullish on, say, a cinema hall, or those doing well, because people have got used to a Netflix or an Amazon, etc. But many other sectors will see upsurge. Textile, which has already seen a rise, may just continue to perform, and some of their stocks will perform. So you need to understand what your performance has been over the last 4 months with respect to how the market has behaved in November, December, January, over the last 3 months. And then you'll be able to understand that you might not be doing that badly, or you're doing extremely badly. Then you need to change your positions in some of the stocks and take the hit. So I believe at around 16,800, with the being around 20 times 1 year forward earnings, we are looking at a fall of no more than 1,000 points, which is no more than 6% from here, 6 7% more of a decline in the index, which, yes, it can hit you big, 10 11% on your portfolio. But then whenever the recovery takes place from, say, a 15,800 or a 16,000, it's going to be big. So one more thing I want to add here: 7,500 on the Nifty at a 400 rupees earning is around 19 times. All right. So that is what we were at in 2020, when the market made a bottom. Today, the earnings is going to be 1 year hence going to be 850 rupees. And around 16,000, we will be around, say, 19 times again. So if we go to 16,000, say we have a rally and we go to 16,000, say by May we are at 16,000, it doesn't recover that early. And over the next 4 months, we are at 15,800, 16,000. Then in May, we would be looking at earnings of FY23 first quarter, that will be in June or July. So what I'm trying to say is that with the time going by, stocks and companies are earning. Asian Paints are earning big time. Okay, Pidilite is going to make money. when things open up, these companies are going to make money. Cement companies are going to make money. Many of the IT companies will continue to make money, albeit there has been a stock decline because the run up has been extremely fast. So what will happen is that earnings will be more, stock prices would have declined, and then another run up of PE expansion will take place, which a lot of analysts are saying that we have had a PE expansion and everything. We are having a PE contraction for the last 3 months, and there has been a brutality of fall. The third point I want to make here, and which is extremely important, is the fact that currently the market behavior has changed from what it used to be, say, 7 to 8 years back. What it used to be 7 to 8 years back is that a fall of 1,000 points on the Nifty, or say, let's not go by 1,000 points. So 1,000 points means around 6%. Around 6% fall on the Nifty may take around 4 months, 3 to 4 months for that to take place. Okay, a fall of 12% on the Nifty may take 6 to 8 months to happen. But here, what is happening, a 10 to 12% fall on the Nifty takes place within a month, no more than that, within few weeks. So we were at 18,300 just about what, 3 weeks back. Kindly do write down on the comment box as to when we were at 18,200, 300, which we were recently. Right now we are at 16,800, staring at 16,800. We are down 1,500 points in a matter of probably 7, 8 trading sessions, if I'm not wrong. So that is the kind of market we are in. It's going to be highly volatile. It's going to be up and down movement, and it's going to reward you very quickly. It's going to take the money out of you very quickly. And that's why I've gone into a trading mood, positional trading mood, rather than an investing mood. Although I have investment positions, I'll keep building it that up. But if you have an investment mindset, that is the fourth point I want to make here. So the third point is basically the market movement has shrunk with respect to time frame. So the market movement is taking place over a very shorter period compared to, say, 7, 8 years back, when there was less internet in India. So the change that I feel that has happened is internet renaissance that has taken place from 2016-17, and post that, right now, with so many accounts, so many retail accounts that has been opened up, there is a lot of retail participation in the market, even on intraday basis, and that's why the movement is extremely sharp compared to what it used to be, say, about a year back, even 6, 7 years back. So I have been into the market for the last 10 years, 10, 11 years, from 2011 November. It's going to be more than 10 years now. And I have seen all phases, and this is a totally different phase, and this is going to only accelerate. So what will happen is, and that is why I am saying, basically, with the fourth point that I want to make here, is that the markets may again be at 19,000 by July, and the mid cap index might again be at 37,000 by July, if we just keep calm. So this is the bottom line that I wanted to tell you all, that this market is going to reward those who stay calm in very difficult times, and make money and book profits in huge exuberance in the market. I tried to do that in one or two stocks. I've got stuck, so there's no way I'm going to sell at so much of losses. There are losses that I am also incurring at the moment with respect to stocks, and you people as well. But something like, again, these are not examples, but I'm just telling you, the biggest retailer in the market, a biggest consumer player, electronic consumer manufacturing player in the market, one of the biggest online player, that an IPO that just came in, and which was a profitable company, that has gone down something like 40% from the top. These companies will not stay like that. People will buy into it, and buy into it big time. It is just that the risk on trade has to come back. So when will that happen? That is the next question. I believe that would happen once the market has priced in India's condition. It's not about global now. It's about what will happen in the budget. And people are jittery. We could have a wealth tax that could be less than 5 crores. We could have long term capital gain, that could be totally different. It's not long term, will not be 1 year, it could be 3 years. We could have a greater STT, greater short term capital gain. A lot of things are flying around. So the market is extremely jittery, and I have seen, the last point I want to make here, I have seen that whenever markets go very jittery into the budget, the final climatic fall that takes place is on the day of the budget, and then the market move on the upside for the next 2 3 months is big. And I have made that mistake in 2016 to sell at 6800. I can say that openly here. 6800, I sold all my positions in 2016, February 28th. You can take out the data, and then it made a bottom. And from there on in, the market went ahead and touched, I think, probably 12,000. So it went ahead and moved up something like 70% from there. I did ended up buying the stocks the next day and over the subsequent week, and then make money, but I sold in losses. So I'm just saying that it seems the similar situation, and we could be headed towards a very tumultuous day on the budget, and we could probably hit not 16,000 in May, or probably hit 16,000 on the budget day. But things will reverse. I think at 16,000, this market will become extremely cheap and people will buy into it. FII would have to come back someday. I mean, FII has been selling from April. FII sold when the market was at 15,000, 16,000. FII sold at 18,000, 18,600. FII are selling even now. I don't think that FII will keep selling for 18 months, 24 months, and going forward. It has been 9 months already that they have been selling. This is the 10th month, and it's going to be a negative figure here. I think they are waiting for the budget. They're worried about the budget. They're worried about a lot of taxes that would come in, because the stock market participants have made a lot of money. So we'll see how it goes. If the budget is bad for the market, then there'll be more fall. How much fall can it happen after the market has fallen so much? I'm not talking of the Nifty, but I'm talking of the mid cap index. So probably more fall. So let it be. We are already falling, and if the budget is somewhere better, then we could be headed much higher from the budget day itself. So basically, stay put where you are. These are the reasons why I believe, and why I'll be looking to probably not sell anything, and look at my portfolio by March as to how it performs. Yes, if you are having stocks that are underperforming the market, if your portfolio is underperforming big time in the market, where you have mid cap stocks and the mid cap index is down 14%, you are down 20 25% from your holding price, then you need to really look at your portfolio and make changes. All right, so I'm ready to answer your queries. Kindly use the super chat, super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Okay. See, BCG group, it has gone up a lot. So my opinion is that in this fall you can slowly accumulate, but have a 1 year to 18 months view, and then you'll be able to make money. Don't expect that it's going to reverse in the same way that's moved from 5 rupees to 170. So it will move like that again. I think Jubilant is a buy at these levels, Nitin. I believe 3,000 is a good support. I think you can buy from here till 3,000, and probably post IPL, you're going to make good amount of money into it. I think money can be made here, but you have to be having a time frame of 1 year, although you can sell within the next 3 4 months. Uh, okay. See, Sigachi bought at 400. Do not worry that much. I think 300, 320 is a strong support. It can go to 320, 330 again if somebody who want to buy. These are very decent levels to buy Sigachi. See, they are going to come up with 14 rupees of EPS, or probably around 17, 16, 17 rupees of EPS for FY23. I think it's at very reasonable level at 2021 times earnings, Sigachi. Loris can be accumulated here, but if somebody wants to trade Loris, I would say that you wait for 550 levels to be taken out and only then buy. Don't buy here. That would be better. Say IEX for 10 years. it's a decent company. I won't say you buy for 10 years. What you can do is you buy here and probably look for 330, 350 to make money and exit. It's not a cheap stock. It's not a stock that it is coming at very good valuation to buy for 10 years. So I won't say you buy for 10 years. You buy for a couple of years. Look for 330, 350 to exit. Nathan, thanks for your contribution. Can I continue to accumulate Nika? Currently holding at 2000. Yes, absolutely. You can buy here. I think at worst, I see 1400 on the stock. That's what I feel. So you buy some here, wait for 1400 to buy more. I think in 1 year time, you will see 2800 to 3000. I think 2600 to 3000 possible by next January. I still believe there's a lot of meat left in Nika. I think the move could be very sharp. And I believe the move could be extremely sharp in the mid cap stocks if you're buying top quality mid cap companies. So, yes, you can accumulate here, but have gumption to hold through losses and only then buy into these companies. All right. See, Blue Dart for me is an avoid. I think there are other better companies to look at. Blue Dart has run up us so much. It was a better stock to buy probably at lower levels. Yeah. Tata Consumer is a buy as a portfolio stock. I won't say that you buy Tata Consumer for a trade, but you keep accumulating here between 680 to 720. Good levels to accumulate in 2 years' time. I see 1000 levels on the stock. I see a major upside in Tata Consumer over 2.5 years' time. So yes. See, my view on India Mart and Intimesh is simple that their business is okay, everything is fine, but the numbers, the biggest numbers are already done with. With the pandemic getting over, I think it's not going to be the same. The numbers are going to not going to be the same, and I suppose it was at exorbitant levels, and so it's getting smashed. I won't say you buy at these levels. Look at other companies to probably get into. Deepak Nitrite again, it's a 3 year play, 2 to 3 year play. Accumulate here. I think 2000 is a strong support. Could go down to as low as 2000, but probably accumulate here and wait for an up move to exit. Probably book profits at 2800, 3000. That would be my call on Deepak Nitrite. Again, Dr. Lal is a portfolio stock that can be bought. Again, a stock that did well. Again, a sector that did well during the pandemic. So I won't say that will do extremely well. But yes, valuations are attractive for a 20-30% of move that can be bought. Okay. See, Bajaj Finance, I normally do not talk about finance stocks and all those, but Bajaj Finance is very attractive at 6,800, 6,500. Could go to 6,500 if things really go bad momentarily. So around these levels can be accumulated. Thank you, Shardul, for your contribution. View on BSC and Reliance, what target in 1 year? See, BSC from here can give you 20%, 25%. See, it is an expensive stock, and after listing of LIC may just consolidate and decline. Reliance for me has a target of 3,000 over 1 year. I think there's a good upside that is possible, 20 to 25% upside in Reliance that's possible with a lot of things that the company is doing. I think 2,800 to 3,000 could be possible in 1 year time. And that is why I believe that Nifty is going to perform much better than what it is doing currently at the moment. All right. Can we buy Map My India? Yes, one of my favorite stocks. I've not bought into it. If I get opportunity, I'll definitely buy. Around 8,000 crore looks extremely good. Uh, Accumulate and have 7-8 year time frame. Then you're going to make big money. Otherwise, it's going to test your patience. So if you have 5 to 8 year time frame, only then accumulate the stock. And yes, it's a top class company to hold from a long term point of view. As a portfolio stock, it is one of the best companies to buy. Newgen Software is also good. I think in the mid cap IT space, Newgen is good. Birlasoft is good. These are top class companies to buy into. Tata Elxsi, if it goes to 6,000, is good. With the kind of numbers it has come up, LTI, even Larsen and Toubro, Infotech, L&T Technology Services, all these companies are good. But see, IT as a whole may struggle for the next 3-4 months. and may come back into fashion in the second half of the year. So it's time to accumulate the stock. I won't say you can trade these stocks well for 2 3 months, even positionally. What you need to be probably doing is buy these stocks and hold them over 3 to 5 years to make money, especially something like a new gen, because smaller companies will test your patience even longer and will perform at their own sweet time. And that's why it's better to buy larger mid caps for trades rather than smaller ones. Okay, what else here? See, CDSL is headed to 2000. As disclaimer, I have the stock. I think 202100 possible over the next 6 months. Tata Motors can be bought. I think around 420 to 440 if you get the stock. Good levels to buy. I think it's around 460, 470. Any 5 7% decline, that's where you accumulate the stock for a target of 540 and then book profits. It's not a long term hold, but yes, for trades, it could be bought on declines. Okay. IGL and MGL, for some reason, I feel that it should be avoided at the moment, these companies. I think look at consumer centric companies, look at cement companies, look at real estate, look at real estate ancillaries, etc. They'll do well. See, FL is doing a lot of things. These are good levels to get into FL. It's not falling a lot. It has been performing well, and this is giving you a chance to get into something like an FL. Even a Root Mobile with the kind of fall that we have seen. If somebody has a 3 year view in both the stocks, they can accumulate the stock. I think SHIL is very attractive at these levels. But again, as a small cap company, you have to have patience. So have patience for 3 to 5 years, and then you're going to see how it's going to perform. Give it 12 quarters, 15 quarters to perform. Smaller companies will again test your patience for you to make money. All right, guys. Thank you. Thanks a lot for being online. Kindly do subscribe to my channel, hit the bell icon so you can get my videos straight away when I post it, and do support me on Patreon. And if you need any help, one-on-one discussion, do email me for that. We could work things out with a fee. Thank you. And disclaimers do apply. Kindly take that on note. Thanks a lot.